What's going on, everyone? This is Gaurav and welcome to my learning channel. So this video is the start of a new playlist where we'll learn about financial accounting. Wow, talk about being boring and nerd, right? Alright, jokes aside, I will try to make this subject as much fun and to the point as much possible so that you don't have to get bored. And trust me, more you learn about this topic, more you will understand how powerful and useful this information is. So without any further delay, let's get started. So first of all, a question needs to be asked, why do we even need a financial accounting? Well, the answer is actually twofold. First one is to provide the relevant information to the decision maker, and second one is it provides an excellent and standardized tool base for decision making. Now, in case this does not make any sense, just keep watching. Promise me it will make a complete sense by the end of this video. So first of all, let's try to understand where did the entire concept of accounting even come from? And how come it's so complicated? Like, what the F were people thinking, right? As a matter of fact, if you look at any of the ancient civilization, they all have traces of some form of accounting. Egypt, India, Greece, Europe, and so on. Pretty much everywhere you will see that there is some form of accounting going on. So why did they even need accounting? I mean, for all practical purposes, all the ancient people did was get up, grow some food, eat, fight with each other, and sleep. Or at least that's what the perception is, right? Well, not really. You see, at any point in time in ancient civilization, there has been a lot of proof of trades. Sometimes people would simply barter with each other, and sometimes people will have standardized way of payment. But one thing was common, that people were dependent upon each other. Now, whenever we have any form of exchange for the goods, the services, and you want to scale this concept to the entire civilization, you would want some form of a standardized process to first of all assess the value, and second, log any of the exchanges or the financial activity so that this can be tracked over a period of time. So as each of the civilization were developing the so-called accounting in their time, they perhaps realized that it all boils down to two important questions. First one is, what is the current financial condition of any entity on a given day? This could be your goods or services provider. And the second one is, how will the organization or the entity perform over a given period of time? Let's just say over a season or over a year. So I hope it is all making sense so far. Now, before I proceed, I have a kind request. If you like the content so far and would like to see more of such future videos, I would like for you to smash that like and subscribe button. Your love in the form of like and subscribe and the comments is what keep the content creators like me keep going. All right, so coming back to the topic and fast forward to today. So you will realize that these two questions are still very much prevalent. For any firm's performance, we need a crystal clear answer to both the questions. Now, these two fundamental questions are applicable to the business of any size or industry. So for instance, if you're running a lemonade stand, you would probably want to know the same two things. First one, where do I stand right now? AKA, how many lemons do I have? How many plastic cups do I have? Do we have the table on which we are going to sell the lemon? And so on. And coming to the second point, once your business has been running for some time, you would like to know that how well did your business perform over a period of time. So let's just say that by end of the year or by end of the day or the week, you would like to know that how much did we sell, how much did we lose, and how much did we earn as a part of this entire process. Now, given how fundamental and how important this question is, I'm guessing at some point in time, people from these civilizations or the country realized that there has to be some form of a standardized framework to ask and answer these questions. Lack thereof would only create confusion and would delay things and perhaps create inefficiency. So, to answer the first question, which is where do we stand right now, people developed something called a balance sheet. And to answer the second question, they developed something called an income statement. Now, in case you don't know what these are, you don't have to worry about anything because we will go through them in detail in the subsequent video. And once we're done with the entire playlist, you would be champion in these financial statements. Okay, so going back to our history lesson, perhaps for one last time. So once people figured out the ins and outs of balance sheet and income statement, they combined them together and they developed something called a statement of stakeholder equity. And in modern day and age, you can get hold of most of these financial statements for traded companies on various web portals, as for example, Yahoo Finance or any of the brokerage portals. Now, combination of all of these three statements is called accrual accounting. It's kind of a weird name if you think about it. So as a basic principle, as a part of accrual accounting, we capture the impact of any action in the period it occurred as compared to when the cash was actually exchanged. So like say for instance, if you sell your motorcycle to your friend and he says that he's going to pay you back in a few weeks, and few weeks go by and then let's just say that your friend does make a full payment, then based on the modern accounting principles, you would account for both the activities, meaning when you sold the bike and when you got the cash, and you would log them both separately. The first part would be more of an accrual accounting and the second part would be considered more as a part of your cash accounting. Alright, so moving on, why do we even need accounting and who uses all of this information anyway? So let's take an example of your lemonade stand itself. The first user would probably be you only. So you as an owner would need these accounting principles and the financial statement to gauge the health of your organization. And the second set of users could be the employee in your organizations. And the reason why they might be interested in this is because they would probably like to know that how safe is the future of this organization, because they would probably be worried about how safe is their own job in the organization. And third, and probably the most important one, is your potential investor. They would also like to study some of these documents in detail because they would like to know, is your company even worth investing or not? And if so, they would like to go ahead and invest some money in your organization. Now imagine you being one of these entities. So let's just say that you are one of the investor and you are looking for a cash cow company where you can invest and gain some fat profit. You would want the health of the company of your interest to be accurate, standardized, and robust enough so that the facts cannot be tampered by an internal or the external entity to influence their agenda. And you would want the standardization to be followed by everyone so that there aren't like too many different versions of the same report. And with this, you will get the good clarity in a company's overall performance. Now this is where GAAP, which is GAAP, and IFRS comes into the picture. Now GAAP refers to the generally accepted accounting principles, which is a set of accounting principles being followed primarily in US. And IFRS stands for the International Financial Reporting Standards, which is again a set of accounting principles which is followed by most of the countries around the globe. So between GAAP and IFRS, you will get a very good framework of the standardization that you essentially need as your day-to-day accounting. Now, of course, just having some standardized report does not suffice. So you would want to make sure that the companies do follow these principles diligently and they are not just making some stuff up. And so this is where auditors sort of comes into the picture. Auditors typically have a very solid understanding of the processes that is being followed in a particular industry. And as a part of an audit process, they would look into the ins and outs of the company to ensure that facts which is stated in the balance sheet, your income statement, and other financial statements are fairly accurate. So hopefully this would have given you a good idea about what is accounting and why do we need it. Now check out some of the other videos in the playlist to get a better understanding of accounting and how it has been used to create other financial statements. Thank you so much, and I wish you best of luck in your learning journey.